Good day, investors. In this video, we'll take a closer look at B2Gold, ticker symbol BTG. The company recently reported strong production, gold prices are near historic highs, and yet the stock has struggled recently. So the big question right now is simple. Is B2Gold a cheap gold stock opportunity, or is the market correctly pricing in some serious risks? In this video, we'll break down B2Gold's recent financials, the importance of the new Goose Mine in Canada, the overall gold market trend, and whether B2Gold stock could be a buy for long-term investors. But before we get into it, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming videos. Thank you very much. B2Gold is a major international gold producer. The company operates several large mines around the world, including Fekola Mine in Mali, Masbate Mine in the Philippines, Otjikoto Mine in Namibia, and the recently developed Goose Mine in Canada. These mines produce gold, which is then sold into the global market. To understand B2Gold's business, we first need to look at the company's production profile. As we can see here, B2Gold has built a fairly large and diversified gold production base over the past decade. Back in 2015, the company produced roughly 493,000 ounces of gold. But through new mine developments and expansions, production increased significantly, eventually reaching around 1 million ounces per year in recent years. In 2025, B2Gold produced roughly 980,000 ounces of gold. And for 2026, the company expects production between about 820,000 and 970,000 ounces. The company also has some ownership in several strategic investments. In total, these investments have a portfolio value of roughly $600 million. These include stakes in several exploration companies, such as Snowline Gold, Founders Metals, Omega Metals, and Prospector Metals, which are focused on discovering new gold deposits in regions like Yukon, Suriname, and Newfoundland. B2Gold also owns a significant stake in Versamet Royalties, a diversified metals royalty company. These investments give B2Gold additional upside exposure to potential new gold discoveries without having to directly operate those projects themselves. So while these investments are not the company's core business, they still provide long-term optionality and potential value creation for shareholders. Now let's take a look at B2Gold's most recent production results and cost profile. In 2025, the company produced approximately 980,000 ounces of gold, which was within the company's production guidance range. Production came primarily from the company's three core mines, Fekola in Mali, Masbate in the Philippines, and Otjikoto in Namibia, while the Goose Mine in Canada only began contributing production later in the year as it ramps up operations. When we look at costs, B2Gold reported cash operating costs of about $769 per ounce, which was actually below the company's guidance range. The company's all-in sustaining costs, or AISC, came in at around $1,584 per ounce, which is also within the expected range. Overall, these results show that B2Gold continues to operate as a relatively low-cost gold producer, especially when compared to many other companies in the gold mining sector. And with gold prices currently trading far above these cost levels, the company is still generating strong operating margins. And now when we look at the company's guidance for this year, B2Gold expects total gold production to be between 820,000 and 970,000 ounces. For 2026, the company expects cash operating costs to range between roughly $1,155 and $1,280 per ounce, while all-in sustaining costs, or AISC, are expected to come in between about $2,400 and $2,580 per ounce. When we break production down by mine, we can see that the Fekola complex in Mali remains the company's largest asset, expected to produce roughly 410 to 460,000 ounces of gold in 2026. The Masbate Mine in the Philippines and the Otjikoto Mine in Namibia will also continue contributing a meaningful portion of the company's production. And importantly, the Goose Mine in Canada is expected to produce between 170,000 and 230,000 ounces of gold as it continues ramping up operations. So while costs are expected to rise in the near term, the company is also adding a significant new source of production, which could support long-term growth. And that new source of production is the Goose Mine, one of the most important assets for B2Gold's future growth, located in the Back River Gold District in Nunavut, Canada. B2Gold owns 100% of this project, which gives the company full exposure to its future production and exploration upside. The mine is designed to process about 1.5 million tons of ore per year, and the reserve grade is approximately 6.8 grams of gold per ton, which is considered relatively high grade for a gold mine. Commercial production at the Goose Mine began in October 2025, and for 2026, the company expects production to be between 170,000 and 230,000 ounces of gold as the mine continues ramping up. Over the longer term, the mine is expected to produce around 300,000 ounces of gold per year, starting around 2027. This means the Goose Mine could become one of B2Gold's most important assets, significantly increasing the company's overall production profile in the coming years. Now, while the Goose Mine could significantly improve B2Gold's long-term production profile, there are still several risks investors should keep in mind. Like any mining company, B2Gold faces a number of important risks that investors should be aware of. One of the biggest risks is geopolitical risk, since the company's largest mine, Fekola, is located in Mali, a country that has experienced political instability and regulatory uncertainty in recent years. Another risk is cost inflation. Mining is a very capital-intensive business, and rising costs for energy, labor, and equipment can put pressure on profit margins. There is also execution risk related to the Goose Mine ramp-up. New mines often face operational challenges in the early stages of production, and delays or higher-than-expected costs could impact the company's near-term financial results. However, beyond these company-specific risks, there is also an important macro factor that could work strongly in B2Gold's favor: the price of gold. One of the biggest tailwinds for the company going forward is the price of gold, which is currently trading above $5,000 per ounce. Gold prices have been trading near historic highs in recent months, driven by several important macroeconomic factors. One of the biggest drivers has been persistent inflation and rising government debt levels around the world, which has increased investor demand for gold as a store of value. At the same time, central banks have been buying large amounts of gold, particularly in emerging markets, as countries look to diversify their reserves away from traditional currencies. Geopolitical tensions and global economic uncertainty have also supported gold prices, since gold is often viewed as a safe haven asset during periods of instability. So if gold prices remain strong or continue rising in the coming years, companies like B2Gold could benefit significantly, since higher gold prices can directly increase their revenue and profit margins. Now, the big question for investors is whether B2Gold stock is attractive at the current valuation. At the moment, the company has a market capitalization of roughly $6.4 billion and is trading at around $4.85 per share. Looking at the company's valuation metrics, B2Gold currently trades at a forward price-to-earnings ratio of roughly 7 times earnings, which is significantly lower than the broader gold mining industry. Wall Street analysts currently have an average price target of around $6 per share, which would imply roughly 20 to 25% upside from current levels. The company also pays a small dividend, currently about 8 cents per share annually, which gives investors a yield of around 1.6%. So overall, the valuation suggests that the market is still pricing in some uncertainty related to geopolitical risk in Mali and the Goose Mine ramp-up. But if the Goose Mine performs as expected and gold prices remain strong, B2Gold could potentially see higher earnings and cash flow in the coming years, which could support a higher valuation. So I think that at the current valuation, B2Gold could offer an attractive risk-reward profile for long-term investors who are willing to accept some geopolitical risk. If you found this video helpful, remember to leave a like for the YouTube algorithm and subscribe to the channel for more upcoming videos. And as always, remember to do your own due diligence before making any investment decisions. Thank you for watching, and happy investing.